Hi, this is Mike Darden with Compass Realty giving you your June 2021 mid-year market update for Lee County, Florida real estate. So first off, thanks for watching. A lot has changed in the last year. In fact, the most searched Google question for real estate is, are we in a bubble? So let's do a deep dive on that, and if you have any questions on how the changing market affects you, whether you're buying or selling real estate, contact me here and I'd be happy to talk to you at 239-542-2822. The mid-year market report shows that sales are up approximately 43% year over year, inventories down an astounding 77% year over year, and prices are up an incredible 33% year over year. That's giving us just under a 1 month supply of homes on the market, putting us in a solid seller's market right now. Just for reference, anything over a 6 month supply is a buyer's market, and we are well below that. The average price of a single family home today in Lee County, Florida is $499,486. That is up approximately 38% year over year. Condo average sale price is $333,433. That's up about 37% year over year. One bright spot in our market is homes are starting to come on the market faster. Year to date, new listings are up 9.4%. So buyers are starting to see a little bit better selection. Interest rates have been as low in the last year as 2.5%. You can still get that rate if you're on a 15-year fixed mortgage. 30-year fixed mortgages are hovering around 3.1% at this time. So still at historic lows. It's expected to gradually increase through the rest of this year. Many experts are predicting big increases next year for interest rates. It's important to understand that for every 1% an interest rate goes up, the buyer's ability to qualify for a home drops 10%. So for example, a $500,000 buyer that is fully qualified, if rates go from 3.1% up to say 4.1%, that buyer may only be able to qualify for a $450,000 home. So we'll be watching that closely. New construction has its challenges. We're seeing a lot of new construction in the marketplace right now. However, supply constraints for materials and the lack of skilled labor has really slowed the construction process down. Many builders are telling their customers they're a year to a year and a half out for completion dates, which is forcing buyers that need immediate housing to look back towards the resale market to supply their housing needs. Eviction moratoriums have been lifted in July, so that is no longer an issue for investors, landlords. Foreclosure market, we're going to watch that closely as the restrictions on forbearance programs start to expire. So right now, many folks have already worked out their forbearance issues with their lenders. Some have added payments onto the end of their loan. Other lenders have simply modified an existing loan. So we'll keep our eye on that. If buyers right now get in trouble, they're fortunately, due to the increase in appreciation, many can sell their way out of their situation without any trouble at all. Migration patterns have changed dramatically over the course of the pandemic. We always have the strong Midwestern, Northeastern migration that's occurring. We also have now seen an increase in the east coast of Florida migration to the west coast. So folks are selling their houses in Miami and Fort Lauderdale for much higher prices, and we are a relative bargain compared to those prices. So they're moving over here and either downsizing their financial situation by buying a less expensive home here, or upgrading and buying a very nice home for the same price that they sold over on the other coast. So that migration has been strong. Also, we're seeing a strong west coast of the United States migration moving to Florida and Southwest Florida in particular. A lot of buyers are now coming from states like California, Colorado, and Hawaii, and we're seeing that on a regular basis. That is new. We have not seen that migration pattern before. Back to the question, are we in a housing bubble? That's a very realistic question to ask, and most experts agree that the reason we're experiencing this is due to the low inventory combined with the low interest rates. So if there's a dramatic shift in either one of those, that could disrupt the real estate market. But if the shifts in those two factors are gradual, we should see a relatively normal, calm real estate market. So we'll be keeping an eye on that and be keeping you posted. At this point, we're still expecting steady growth in our prices and our inventory throughout the rest of the year. Thanks so much for watching. I hope you enjoyed the video. Bye-bye.